Hi there, my name is Ewan and I work for Able. So today we'll be discussing the foundations of support and resistance. So what they are, how we use it, and how to identify and mark the strongest levels on our charts. So what is support and resistance? Support represents price levels. We can expect price to stop falling due to an increased buying interest. So essentially there's a downtrend in the market, and when it gets to said price level, the support, we expect it's a support price because there's more buying action and to work essentially, and price to rebound off. Similarly, resistance, well, oppositely, resistance represents price levels. We can expect price to stop rising due to increased selling interest. So the uptrend will end and the selling trend will go down. So these SR support and resistance levels are displayed as horizontal lines across the chart that denote supply and demand, so where people wanted to buy from or sell from, and that's what moves price. So from our previous supply and demand video, we know what supply and demand is, why price moves, and that price moves through the path of least resistance to reach high probability liquidity areas. So our aim here is to apply SR, support and resistance, to our charts so that we have levels that are respected when price visits them, which we do by placing horizontal lines or rays for our technical analysis. So in future videos, we'll get into identifying support and resistance zones, so it looks more like a box or an area rather than one fixed level. But in order to get that, we do have to start with one fixed horizontal level. It's just the foundations of SR essentially. So support and resistance is somewhat subjective. So what that means is what I may identify and think is a support or resistance level, you may simply not. That's the bottom line of it. It's subjective, especially when we get into larger time frames and the level is placed on an exact dollar figure with lots of percents and decimals, then it's very subjective. That's why we get more onto zones, but for now we start with identifying the levels. So it's referred to support and resistance as SR, makes sense, or a key level because it's a key price level. Just because a level is above a price doesn't mean it's resistance, and just because a level is below doesn't make it support. So essentially what it's saying is if price is below a resistance level, then that's the resistance. But just because it goes above doesn't mean it's not a resistance. It could just be retesting said line and it could go back down. Or on the other hand, it could just shoot straight through our resistance level and flip and become a support. So it's from an emotional bias point of view, it's good to label it a key level or an SR level because it's not really just one of the two. So how do we find our SR levels? So we identify levels based off candle closes, not the wick. The wick is not important in this case, it's the candle which has the strength. The wick is more important when it comes to liquidity, which is covered separately. So we can see here on the right that these two candles, the top of the candle, not the wick, perfectly lines up, and this forms a resistance level, right? Because price has come to this level and it's been rejected, it's unable to break through twice and is falling. So pick easily identifiable levels. So what do we mean by that? There's a common misconception with trading that you need to do things and see things that other people can't in order to gain an edge in the market because 99% of traders lose, right? So with this, that doesn't really apply because if no one else can see or identify the levels which you have on your chart, then they simply won't have any value. Because at the end of the day, we're just drawing lines on a chart and hoping that price respects it when it gets there. And because of that, we hope that our levels are the same as others, so they're both the same. So we can identify where people are going to buy and sell from and identify our support and resistance levels in the market and use that to guide our decision making and our trades. At some point, even if everyone's not using a chart and they don't look for these resistance levels or support levels, the market has to come together and reverse at some point when the market is deemed overbought or oversold. So it's too high or too low, it has to reverse the trend at some point, and that therefore forms respected price levels for SR. So another sign of a strong SR level is candles that have no retest. So a candle preceding a big move. let's see what that looks like. So we can see here lots and lots of resistance levels which are completely untested. For example, here candle close goes out. This is an example here. This price here, it's got to this level and it's dropped suddenly. It's not forced its way above in any way, and there's been no retest. So when price gets here, we assume that it will react the same as it did here and just dip down. It's that simple and basic. So another sign of a strong SR support and resistance level are levels which have been retested but respected by the candle closers. So this is essentially the little guide we use for that. One retest of said level is the best, and we're most confident on the first retest. The second retest, we can see the level is respected and it's good. But on the third retest, we can see that maybe price isn't going our way and it could just break through. So here's a visualization of that. We can see the initial support here. Remember, it's not bang on. It's just, we can see a clear level here where price hasn't broken. So this is our initial support level. We can see it's come down, it's tested it, it's come back up, it's come down again, it's bounced straight off our price support, and it's gone back up again. So this is where we look for our long positions if we're playing our support levels. But again, on our third retest, it broke and it's gone straight down. So now what we have is a new level of resistance. So this level here, resistance, this level here, resistance, this level here, resistance. It's all smaller levels of resistance. So how do we identify strong SR levels? Because we've seen so many of them. So high time frame candles, HTF, which you can know about in the trading glossary, those candle closers produce the strongest and most relevant levels. The lower time frames, on the other hand, they get hit more often because the candles are smaller, so naturally price moves faster, so to speak, than a monthly candle where it takes a month to update. But as a result, they aren't as strong. And it's important to cover all of our time frames so it can build a good perspective of the market. So it could get all the way up to our weekly resistance, and it could just suddenly drop before, and we may think why, and it could come and we could see that we have a daily or a big hourly resistance just below, and that's the reason for that. So it's very important we analyze the whole market and gain a good perspective, but maintaining the fact that when the price comes to our higher time frame candles, there's a higher chance that it respects them. So when plotting our levels, start high and make your way down through the time frames, as I just kind of covered. The monthly is the highest we'd recommend going if you're using like yearly candles, I don't know. But time frames are very important for this, and to be honest, support and resistance applies all the way through the time frame. So down to the minute one, we can see small levels of support and resistance all the way to the monthly where the levels will be stronger and more relevant, and it's good to do that. So color coding your levels helps stay organized. Do this based on the strength and time frame of the levels. So as we saw in the picture before, there's loads and loads of levels, and a lot of them just aren't very good or aren't very useful. So we can see if it's untested and it's in the middle of a big move, it may not be as good as a peak, so to speak, which is lined up and being retested over time. And we see a nice trend of support and resistance. So this essentially will help you when you're looking at your chart not get confused. So imagine you have your weekly, your daily, your monthly resistance and support levels in different colors. So when you go on the chart, you don't get confused and just see a million different blue lines. You can see, oh, we're coming into our monthly resistance. Oh, maybe we're coming into a 15-minute resistance here and not take it as seriously. Or it's not as a strong level, so we'd do it differently. So that's about everything we're going to cover in today's video. So thank you guys for watching. If you do guys have any questions or need support, don't hesitate to get in touch with our socials on the screen. The best place to do it would probably be Telegram in our group, where you could just message an admin and we'll get back to you. So yeah, hopefully this video has given you a bit of an insight to what support and resistance is, and hopefully you guys can use them yourself. I'd recommend going back and back testing levels, see how price reacted to it, and then you can really establish some key levels on your chart, and it will help you moving forward. So thanks.